Hey everyone, welcome back to Corporate Decoder, the place where we break down the financial mumbo jumbo so you don't have to. Today we are diving into Celanese Corporation's latest quarterly earnings report. And let me tell you, things got a little bumpy. Stick around because we are going to decode exactly what happened. Before we dive in, if you love getting straight answers from these kinds of reports, make sure you are subscribed. We also have a fantastic community on Discord all about unpacking this stuff, so join us there, link is in the description. So Celanese is a pretty big player in chemicals and specialty materials. Think about the plastics in your car or the fibers in your clothes. Those often come from companies like this. They make some really high-tech engineered polymers and also some essential chemical building blocks that go into almost every industry. Now let's get to the numbers for the last quarter ending September 2025. Their net sales took a hit, dropping by $229 million, or about 9% compared to last year. They attribute this mostly to lower sales volumes across their main business areas, the engineered materials and acetyl chain parts of the company. Basically, fewer people are buying their stuff. This drop in volume is a pretty big deal. They are saying it is because of weaker global economic conditions and decreased worldwide demand. Think of it like this: if the global economy is slowing down, people and other companies just buy less of everything that uses their materials. It's like when people start cutting back on discretionary spending during tough times. On top of that, prices for their products also went down. For the acetyl chain segment, they saw more supply than they had demand, which naturally pushes prices down. For engineered materials, competitive market dynamics also played a role. So it's a double whammy: lower volume and lower prices, meaning less money coming in the door. But here is where things get really interesting. Operating profit took a massive nosedive. It dropped by an incredible $1.5 billion, or a whopping 620%. Normally, a profit drop of that magnitude would be alarming, but the reason here is kind of unusual. A huge part of this is an item called Other Charges Gains Net. For this quarter, it shows a massive loss of nearly $1.5 billion. The filing specifically points to an impairment loss on goodwill of $1.1 billion and losses on certain trade names, like Zytel. Now, what is goodwill really? Think of it as the extra value of a company that you can't see on the balance sheet when it's bought. It's like the brand recognition, customer loyalty, or talented employees. When that value seriously drops, the company has to write it down as a loss. Basically, Celanese is saying that parts of their business, the engineered materials segment specifically, are not worth as much as they thought, which is why they are taking such a big hit in their profit. Looking at the longer 9-month period, the story is similar. Net sales are down $570 million, or 7%. Again, this is mostly due to lower volume and lower prices across their core businesses. And that operating profit drop is still huge, down $1.6 billion, or 226% for the 9 months. The same reasons apply the massive $1.4 billion hit from those goodwill and trade name impairments, plus lower net sales. Let's break down the segments. In engineered materials, net sales dropped about 7% for the quarter. Volume was down mainly because of weaker worldwide economic conditions and lower prices due to competitive market dynamics. Their operating profit in this segment took a huge hit, down nearly $1.5 billion. The big story here is those impairments we talked about. The acetyl chain segment, though, also saw sales drop about 11% for the quarter. This was also driven by lower prices and lower volume globally. However, here the operating profit, while down, is still positive, though significantly lower than last year. Now, what about their ability to pay bills and keep the lights on their liquidity? They seem to be managing pretty well. They have cash on hand and also lines of credit they can draw on if needed. They mentioned they have $1.75 billion available under their US revolving credit facility. Celanese is also making some big strategic moves. They announced they are closing a facility in Belgium by late 2026, expecting to take a charge of about $70 to $90 million for the closure costs. And in a significant move, they are selling off their Micromax product line for about $500 million. This sale is expected to close in early 2026, and it looks like they are doing this to generate cash and reduce debt. They are also focused on paying down debt after a big acquisition a few years ago. They did have to reduce their dividend significantly by about 95% starting in 2025, which is a clear sign of prioritizing debt reduction over returning cash to shareholders right now. Finally, let's touch on taxes. Their effective tax rate for the 9 months ended September 2025 was just 6%, down from 24% last year. This big drop is largely because those non-deductible goodwill impairments really reduced their taxable income. So what is the big picture here? Celanese is facing a tough market with lower demand and prices leading to reduced sales. The huge impairments on goodwill and brand names signal that some parts of their business are not performing as expected, and their value has decreased. However, they are taking proactive steps by selling off non-core assets like Micromax and closing down less efficient facilities. They are also heavily prioritizing debt reduction, which is a smart move given the current economic climate and their acquisition debt load. While the financial results for this quarter look pretty grim, the big impairments are mostly non-cash charges. The real question is whether their core businesses, the engineered materials and acetyl chain segments, can recover as global economic conditions improve, and if their strategies like cost reductions and asset sales will be enough to navigate the current challenges and get them back on a growth path. The dividend cut is a clear signal of their focus on financial health and debt reduction, which is encouraging for long-term stability. Alright, that is our breakdown of Celanese Corporation's latest filing. What are your thoughts on these numbers and what they mean for the company's future? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into corporate finances. And don't forget to join our Discord community linked in the description for more discussions. Thanks for watching. See you next time.